Okay, good morning, friends. After 5 minutes later, definitely this is a good afternoon, but right now, good morning. So, first of all, I'm going to explain some terms. So, we know transaction means exchange something among the peoples, between the peoples. That's what we call transaction. There are two types of transaction. First one is monetary transaction, second one is non-monetary transaction. So when we think about the monetary transaction, cash is involved right now, otherwise in future. That's what we call monetary transaction. Means in the monetary transaction there are two types of transaction. First one is cash transaction, second one is credit transaction. When we think about the non-monetary transaction, means there is a no cash is involved, means exchange against goods. That's what we call non-monetary transaction, means barter system. So that things that data we have to study already. So in today's lecture, I am going to explain about goodwill. So when we think about the goodwill, goodwill is a reputation of a business. When we think about the goodwill, goodwill is an intangible asset. Goodwill may be described as an aggregate of those intangible attributes of a business which contributes to its superior earning capacity over normal return on investment. So first of all, we know tangible or intangible. So what is meant by tangible and what is meant by intangible? So if we think about the tangible, tangible means if we touch physically, that's what we call tangible, and if we cannot touch, otherwise if we cannot see anything, that's what we call intangible. So goodwill is an intangible asset. That is the most and important question. Goodwill is an intangible asset. So because of that, it may arise from such attributes as a favorable location, the ability and skill of its employee and management, quality of its product and service, customer satisfaction, etc. So first of all, we know goodwill. Goodwill is a reputation of a business. Goodwill is a reputation of a business expressed in term of money. Means when we think about goodwill, goodwill means a valuation. Goodwill means a reputation. So when we want to count our reputation in money, that's what we call goodwill. So goodwill is an intangible asset. So don't forget, tangible or intangible means if I touch, that's what to call tangible. If I cannot touch, that's what to call intangible. That is the first and important question. Second thing, profit and loss. Earlier we have discussed about profit when income over the expenses. Income over the expenses, that's what to call profit, and expenses over the income, that's what to call loss. But when we think about the profit, when the seller price of goods is more than cost price, seller price is good is more than cost price. Means if I purchase a bike for 15,000 and that bike I sell into market for rupees 51,000, means I received 1,000 as a profit. Means when the selling price of goods is more than the cost price, when the selling price of goods is more than the cost price, it is a profit increase the capital of a business. Remember, profit increase the capital of a business. If goods are sold for rupees 15,000 and all expenses during the period amounted to rupees 30,000, then a profit of rupees 20,000. Means if I'm a businessman, I'm selling some product into market for rupees 50,000, that times I incurred some cost 30,000, means I earn 20,000 as a profit. That is the next concept, means profit. So first of all, we learn about intangible asset, means goodwill. Goodwill is an intangible asset. So goodwill means a reputation of a person. When we think about the profit means if selling price is more than cost price, that's what to call profit, and when cost price is more than selling price, that's what to call loss. So when cost price of a goods is more than its selling price, when cost price of a goods is more than its selling price, it is a loss, and loss decrease the capital of a business. So first of all, we know what is meant by capital. Capital means any amount invested in the business by the owner, by the proprietor. That's what we call capital. If profit is increased, automatically capital will be increased, because when we calculate net profit, then this profit we added into capital account. Then loss, if there is a loss, means if our business, yes Vaibhavi, okay, so when our business is suffered from losses, that time definitely our loss, means remember our capital will be less. Just a minute. Capital will be less. That is the second point. Loss means cost of price. Cost of price is more than, cost of price is more than selling price. It is called loss decrease the capital of business. If goods are sold for rupees 15,000 and all expenses during the period amounted to rupees 60,000, then the loss will be 10,000. The next point, income. It is a revenue arising as a result of a business transaction. It is the amount receivable or realized from service provided and earning from interest, dividend, commission, etc. Income. Income means it is a revenue. Means when we earn some money, when we think about the income, income means interest, income means dividend, income means commission. But sometimes commission is also two-way. First one is income, second one is expenses. That's what we call revenue. So first of all, we know income. Income means it is a revenue arising as a result of a business transaction. It is the amount receivable or realized from the service provided and earning from interest, dividend, commission, etc. Then last point, revenue. It is an income that a business has from its normal business activities, usually from the sales of goods and services to customers. Remember, income that business has from its normal business activities, usually from the sale of goods and services. That's what called revenue. So firstly we study about goodwill. Goodwill means intangible assets we cannot touch by physically. Second thing, goodwill means reputation of a business. And third thing, goodwill is an intangible asset. Then we think about the profit. Profit means when our sales price is more than cost price. Our sales price is more than cost price, that's what we call profit. And when our cost price is more than sales price, that's what we call income. Means if we accrued any income, means if we invested any money into business, into dividend, into shareholder, and like etc., then we receive some money. That's what we call income. But when we sell and purchase any assets, any property, otherwise any services to customer, that time we call revenue. That is the next definition. Then we think about the asset, liability, and net worth. Lots of times I use asset, lots of time I use liabilities, lots of times I use net worth. But I know you are aware about assets, you are aware about liability, but you are not aware about net worth. So net worth is the full capital of a businessman, full capital of a proprietor. So first of all, we know asset. Assets means any physical thing or right own that has a monetary value is called as an asset. Any physical thing or right own that has a monetary value. So first of all, we know what is meant by monetary value. Means anything we express into money. Anything we express into money, that's what we call monetary value. Means physically thing or right own that has a monetary value, it is called as an asset. The ownership of asset must be with business units such as land, goodwill, patents, copyright, etc. So there are, just a minute. Okay, sorry for keep waiting. So right now we are discuss about the asset. Asset means when we express anything, otherwise any commodity in term of money, means monetary value, it is called asset. The ownership of the asset must be with business such as land, patents, copyrights, and like etc. This is called asset. Means when we think about the goodwill is an intangible asset. So goodwill also assets, but that is an intangible asset. We cannot touch that asset. So that's why we call intangible asset. Yes, Aditi, my voice is coming. Aditi Chavan, my voice is coming, Aditi?
Yes, sir. Yes.
Okay, what is meant by intangible asset? Remember, intangible asset means those things not present. Means we cannot see anything by our eyes. That's what we call intangible asset, such as goodwill. Goodwill is a reputation of a business. Goodwill is a reputation of a business. Then second thing, profit. Profit means selling price is more than cost price. It's called profit. Then we think about the loss. Loss means cost price is more than selling price. It's called loss. Then we think about the asset, liability, and net worth. First of all, we think about the asset. Asset means any physical thing or right own that has a monetary value. It is called asset. The ownership of asset must be with business units such as land, goodwill, patents, copyright, etc. Then there are three types of asset. First one is fixed asset, second one is current asset, and third one is fluctuations assets. So first of all, we think about the fixed asset or non-current asset. Means the assets which give long-term benefit of the business are known as fixed asset. Long-term benefit, not a 1 year, not a 6 month, not a few months. Long-term benefit. The assets which give long-term benefit for the business means lots of times I used fixed asset, current assets. If you understand very well all the points, then definitely it's good for you. So first of all, we know asset. Asset means a physical thing, otherwise not physical thing. But if we express that thing into money, means monetary value, it is called asset. There are three types of asset. First one is fixed asset, second one is current asset, and third one is fluctuation asset. So first of all, fixed asset. If any assets give us long-term benefit, such as plant and machinery, such as building, such as goodwill, that assets live in the business for a long time. That's what we call fixed asset. Then second thing, current asset. So when we think about the current asset, assets which are held in the business for a operating year and can be converted into cash very easily are called current asset. Means if any assets we are converting easily into cash. If any assets we are converting easily into cash, that's what we call current asset. Means such as cash, such as stock, such as bank balance, such as cash in hand. That is a current asset. Means within 1 year, if you want to convert any asset into cash, that's what we call current asset. And last point is fluctuation. Fluctuation means these assets are not presented by tangible possession or property. They are imaginary assets, but do not have any realizable value, such as deferred revenue, expenses like advertisement paid for 4 years. Remember, advertisements we are using for 1 year, but sometimes this is the capital nature expenses. Means if we think about the advertisement, the capital board means if I have a shop and if I paste that shop front of my shop, that time sometime that board live 1 year, sometime that board live more than 1 year. That's what we call fluctuation assets. Means sometime current asset, sometime fixed asset. Current asset means those assets working below 1 year, means within 1 year, not a more than 1 year. But if any asset converted to more than 1 year, that's what we call fluctuation assets. First of all, we have to study about goodwill. Goodwill is an intangible asset. Goodwill means reputation of a business. Then we think about the profit. Profit means selling price is more than cost price. That's how to call profit. Loss means cost price is more than selling price. That's how to call loss. Then assets. Assets means if anything we express into term of money. That's what we have to call assets. There are three types of asset. First one is fixed asset, second one is current asset, and third one is fluctuations asset. Then we think about the liability. So liability means amount payable by the business to others. Lots of times I use that statements. If you listening my lecture very carefully, definitely you realized all the points, because when I am talking, when I am teaching, that times I use lots of concepts. I use lots of sentences. Sometimes that sentences is useful for you, sometimes it's not useful. Means lots of times I express the term of asset, lots of times I express the term of income, lots of time I express term of loss, goodwill, liabilities, like etc. So we think about the liability. Liability means an amount paid by business to other. That's what called liability. Amount payable by the business to other is known as liability. Amount payable by the business to other is known as liability. It is a debt or amount due from the business to other for the benefit received by the businessman unit, such as loan taken, creditor, bank overdraft, outstanding expenses, etc. Means when we think about the liabilities, liability means any amount payable by the business to other. Means monetary value payable by the business to other, that's what we call liability. There are also two types of liability. First one is fixed liability, second one is current liability. So we had to study before 1 minute ago or before 2 minutes ago about fixed asset or current asset. Same like that, fixed liability. If any liability is live more than 1 year, if any assets live more than 1 year, that's what called fixed asset. If any liability is live more than 1 year, such as capital, such as secured loans, such as long-term loans from banks, as for financial institution, means one of the major source of fund in the business is a fixed liability. Major source means when any person want to start a business, that time that person invested some money into business. That's what called liability. That's what called capital. So that's why we enter first entry, cash on debit to capital account. That is in first entry. Then yes, Vaibhavi, my voice is coming. Vaibhavi Kanade. Vaibhavi, my voice is coming.
Yes, sir.
Can you explain the
No,
term?
sir.
Can you explain the term of goodwill? Do you understand goodwill? Okay, so remember, right now we are discussing about types of liability. There are two types of liability. First one is fixed liability, second one is current liability. So when we think about the fixed liability, that liability live more than 1 year. That liability live more than 1 year. That's what we call fixed liability, such as capital, such as secured loan, such as long-term loan from bank and from financial institution, etc. When we think about the fixed liability, sometimes that liability live 1 year, 2 year, 3 year. We are not sure about that point. Means we have no idea. That liability live 1 year, 2 year, but we use that liability such as capital, bank overdraft, etc. Then next one, current liability. Current liability means if we give any loan for within 1 year, means specific time. Sometime I am taking a loan from business, for business from bank for 6 months, for 5 months, for 10 months. That's what we call current liability. Means current liability, if any liability convert into cash within 1 year. If any liability convert into cash within 1 year, that's what we have to call current liability. Fixed liability means more than 1 year and current liability means less than 1. Then our next point is net worth owner's capital. So when we think about the net worth owner's capital. So if you know some points, if you know capital, if you know reserve and surplus, If you know other thing, definitely you know net worth or capital. The amount or funds provided by the proprietor in the business, it is called capital. Remember, amount of fund provided by the proprietor in the business, it is called capital. Amount invested by the owner into business, that's what to call capital. And any money deposited into business by the owner, that's what to call capital. There are various definitions, but which definition you like, which definition is good for you, which definition is favorable for you, using that definition you remember that concept. So first of all, we know capital as well as the excess of assets over the liability of the business, it is also known as capital. Capital, excess of assets over the liabilities, excess of assets over the liability of the business, it is also known as capital. Means when we think about the capital, liability is equal to asset, means assets is equal to liability. Remember, if any businessman started any business, that time they give 1 lakh rupees. Means 1 lakh rupees is the cash and 1 lakh rupees is the capital. So debit side is equal to credit side. In the account, there are two sides. First one is debit side, second one is credit side. Both the sides it's very must. Both the sides it's very must. So because of that, we think about capital is assets over the liability of a business. It is known as capital or net worth. Net worth includes capital, reservoir. Capital can be form of cash or in kind. Is something goods, cash. So net worth is equal to owner's capital is equal to capital. Owner's capital is equal to total asset minus total liability. Total asset minus total liability. Means when we think about the equation is most. Equation is important. If you remember equation, then definitely you realize all the points. So first of all, earlier we have to study about the goodwill. Goodwill means intangible asset. Goodwill means reputation of a business. Then we think about the profit. Profit means selling price is more than cost price. Then sales means then loss. Loss means cost price is more than selling price. That's what we call loss. Then assets. Assets means anything, that thing we express into monetary value. There are two types of assets such as tangible or intangible. Then there are three types. First one is current asset, fixed asset and fluctuation asset. First one is current asset. Current asset means any asset we convert into cash within 1 year. Any asset we convert into cash within 1 year, that's we have to call current asset. Then fixed asset means that assets live more than 1 year. Then now we think about the assets and liability. Assets is equal to liability, that is the first equation. Assets is equal to liability. Just I am going to explain first example. If a capital of a business is 4 lakh, if capital of a business is 4 lakh and creditor 2 lakh, then total asset is equal to 6 lakh. Liability is 2 lakh, capital is 4 lakh. Liability is 2 lakh, capital is 4 lakh. That times assets is equal to 6 lakh. Total assets is equal to 6 lakh means liability 2 lakh and capital 4 lakh. If total assets 1 lakh 50,000 and outside liabilities are 50,000, the creditor equity is equal to assets minus capital. So there are 1 lakh 50,000 assets minus capital 1 lakh. So creditor equity it's going to 50,000. Then next point, if total asset of a business are 5 lakh and outside liabilities are 2 lakh, the owner's equity is equal to assets minus liability. So there are 5 lakh minus 2 lakh. Now we think about the 3 lakh. So when we think about all the concept, there are last concept, then point is clear. So first of all, contingent liability means emergency expenses, emergency income. Means when we are going to Pune, that time if anything happen suddenly, we break the glass and we secure glass. That's what called contingent emergency exit. Means a liability which may arise in future depend on happening or non-happening on certain event. It is called contingent liability. means we are not sure, means that liability happen uncertain. We are not confirm about that point, but the liability happen in business that time. This is called contingent liability. Such as a worker makes a claim for compensation of 5,000 against the business and the decision is pending in the court. Contingent liability. Sometime worker is win, sometime businessman is win. But we are not sure who is the win. If employee claim to business, sometime employee win, sometime businesses win. It's depend upon the decision of court. It's depend upon decision of court. So remember, when we think about the accounting term, there are few terms. First one is transaction. Transaction means any exchange thing among the peoples, between the peoples. There are two types of transaction. First one is monetary, second one is non-monetary. In the monetary transaction, there are two way: cash transaction or credit transaction. In the non-monetary transaction, there is only one way: exchange goods against goods. That's what we call barter system. So when we think about the monetary, we express into term of money. Then there are 3 points. First one is entry, means when we enter any record with a specific manner. Then narration means brief explanation of an entry. Then debtors and creditor. Debtors means a person payable some money to business, that's what we call debtor. And business payable some money to other person, that's what we call creditor. Then bad debts means we are not sure about the money of debtor, that's what we call bad debts. Then think about the profit, goodwill. So goodwill is a reputation of a business. Then think about the profit. Profit means selling price is more than cost price. And loss means cost price is more than selling price. Then we think about the asset. There are three types of asset. First one is fixed asset, second one is current asset, and fluctuation assets. Those assets we easily convert into cash. Those assets we easily convert into cash. That asset we call current asset. If any asset live for more than 1 year, more than 2 year, more than 3 year, that's what we call fixed asset. And like there are two types of capital, two types of liability. First one is fixed liability, second one is current liability. So capital is fixed liability. Because what is mean by capital? Capital means any money invested in the business by the owner. Any money invested in the business by the owner. That's what we call capital. So capital is the fixed asset, fixed liability. Because capital we use for 2 year, 3 year, more than 3 year. That's what we call capital. Then we think about the current capital, means current liability. So liability which is used only for 1 year. That's what we call current liability. I hope everyone understand very well. Who is one explain first point? What is mean by transaction? Who is one explain? What is mean by transaction? If you understand very well all the points, then definitely you know transaction, monetary transaction. What is mean by transaction? Who is one explain all the concepts with the specific way? Who is one explain? Okay, remember, I don't like to conduct our lecture as like this form, but because of you I am conducting all the lecture as like this one. Because lots of times I say to you switch on your camera, switch on your camera, but I never say everyone switch on your camera. But I am conducting only one way lecture, means I am coming here, I speak half an hour, then I will finish my lecture as like that. Means you decided that thing, you want to conduct all our lecture two way, yeah, one way. I don't like to lose your academic, your study related to that. Because if what is my responsibility, I am coming here, speak half an hour, then I will finish my lecture. That is my responsibility. No any person shout me, no any person blame me. Because of you I am conducting all the lectures as like that. If you are not on your camera, means lots of time I say to everyone switch on your camera, switch on your camera, but you are not following my advice. So definitely this thing is not good for you. I hope everyone understand all the points very well. So thanks for watching, have a nice day.